Traders, what's happening? Jamie Sedley here. It is May 1, and this is the Midweek Strategy webinar with SB Trade Desk. So we have a lot to go through today. Let's obviously start with this big old DXY chart. So first off, here's the weekly, okay? And you can see, we talked about last week the breakout, right? So the breakout at this point, looking like it may very well be a fake out. In other words, a signal in the opposite direction. So you can see last week's rally has been completely retraced at this point. And when you look at it on these longer term charts, you know, this can be a little clearer, in my opinion, as far as even the levels are concerned. So, you know, we finally did hit that 618, which had been gotten so close to hitting a couple times. And then obviously you can see last week we closed above it and we're back below it. So simple thing here, guys, pay attention to that 97.70s area, right? That's the March high. It's also the December high. So that's where focus is. If we zoom in on the daily chart here, chart from yesterday, one of the charts from yesterday, you know, following this simple channel that we started back at the September low, right, which I'm giving kind of validity to because of the clear support line that was here. So the 97, roughly 97.12 or so, something like that, is this parallel, you know, give it a little wiggle room, call it 97, whatever, because that is, or was, I should say, the level that was support back, you know, for like half of April. I mean, we kind of sat on it there from April 9th to basically the 18th, and then you got the up day, right? And then we went from there, and now we've retraced basically most of that move back to the April 22nd lows here. So key level here, if, you know, look, if we zoom in, this certainly is an impulsive look to it. You know, and with FOMC today, that's interesting because, you know, if we count this as a 1 and a 2, is this your 3 and this is your little tiny 4, or is this all 3, right? You know, I like to say that you want them to be obvious, like the counts, you know, and really clear so that you're not forcing a count on something. But at this point, you know, if you were to get kind of a pop, so to speak, right, and fail up around that 97.70 and then come back down, that might be your 5 waves down. All I'm saying is that we certainly have the evidence there that this, you know, may very well be a false break to the upside, which is then, you know, a signal in the opposite direction. And maybe this is the finally getting us the long anticipated, if you will, dollar turn to the downside. We'll see. But again, want to have a clear then look to sell a rally if we get that. But regardless, again, I can't stress it enough. Heading into FOMC today, that's 97.70s, right? Up here, a little congestion over here before we went into the high. That level to me is really important and would like to see that as resistance if indeed we do have something bigger brewing on the downside for the dollar, okay? Let's move on to the other dollar index. And go to weekly here, right? And we'll just go to daily. Long-term channel, turned on it. Daily reversal resistance, turned on it. Right here, you're looking at the top side of this line. is going to be down here, 1,235 or so. That's level to, again, watch for maybe a bounce or something like that in this index, okay? There's another look. Why is this so wonky? Hold on here. Oh, hold on. Daily chart. Okay, here we go. And again, here's another look. Just the channel from back in January here on the low there. Be looking essentially, like I said before, 12,235. That's gonna be more or less in line with these levels here too, right? So we're coming up on kind of a support area potentially for a dollar bounce into FOMC. But again, the bigger, more important issue here is that false break in DXY, okay? All right, if we go into Euro, so the Euro chart, just zooming in on what we've been looking at over the last day or so, or last couple days, been looking at this channel, right, back from the March high. And we're getting up towards that 200 average on the 4-hour chart and getting into that trend line right here. So again, as highlighted over the last day, that's going to be 1250, 1260, and we're there. We just printed 1248, so this is a spot to pay attention to. Obviously now and the rest of today. So opposite of DXY, but you can see here, you can make the case. Certainly, I think even better in you do have 5 up or nearing 5 up here, right? 1, 2, 1, 2, 3, 4, 5. So that's 3, and then 4, 1, 2, 3, 4, 5 is 5. So if we just kind of have a little fun with projections and whatnot, let's say you print up to maybe 1260 or something like that here on this trend line. You're going to have retracements come in at 1170 to 1187, which, of course, happens to be exactly where we would be thinking support anyway, right? You got the low back here in March at 1177. You've got the low here in April 2nd, early April at 1184. And really, I would watch this line off the lows here. So obviously, this is the GDP spike on Friday, but you've got a lot of good touches on this line. At some point over the next couple of days, this might be the level that actually comes into play as support for a higher low, if indeed that's what's going on in Euro, okay? I also want to take a look at a longer term chart that we haven't looked at in a long time. And you'll remember this one. This is the weekly chart. Remember the neckline off the highs back from 2015 and 2016? Remember how we held that level for so long? So like, August, November, we're touching it back in February, March, dip below, back above, end of March, early April, and then last week had the flush below, and lo and behold, we're back above it, right? So again, false break potential here, certainly. All right, we had lows here 2017 that we held up at. And again, if you just look at this chart, you can kind of see clearly old lows, right? In that 1180 80s region, right? And that's where you'd want to see support. If we look out a little bit further on the upside, where's the big test for dollar weakness, euro strength? probably actually after you would take out the highs over here from mid-April. So that would be above 1324, and you've got 200-week average there, and you've got this parallel to the original trend line off of the highs back from 2018, February and March. And that, of course, extends off to January. Basically, for the most part, it's essentially the January trend line. You have the January high here, you have the March high here, and that's going to be up around 1350, 1360, depending on when or if you get there this week. Next week, it'd be closer to like 1350. So really some good levels, I think, to pay attention to. False breaks like this can be the best signals, right? In terms of the most powerful signals, go quickly the other direction. And maybe we're already seeing that, or we already, are seeing that happen right now. So, certainly deserves paying very close attention today, where FOMC, after the print and after the event, where we, end up trading. Ideally, I'd like to see, a buy back in the 1170-80 region for euro at some point over the next 2 days. Also, I did want to bring this up. Kind of weird because it's the middle of the week, but forget that we actually just finished a month. So it's May 1st. We have a doji type candle here on the euro for the month. Okay, so doji candles, right, as the textbooks would teach us, they indicate indecision, so to speak. So by definition, if you've been going lower into this doji and then you print a doji, then guess what? It acts as a potential reversal indication. Here too, on a monthly basis, right? You look at it, you can see 618, and guess where that 618 is? 1182. It's where we'd be looking for support anyway. So a doji at the 618, to me, this is a potentially very powerful signal on the other side, okay? All right, let's move on to the British pound real quick. I do want to show something a little different. I'm going to go to a weekly. You had a doji here too on British pound. Okay, so here's cable. This is a weekly chart. So you see the blue dots and the red dots, right? So that is, and I've talked about this before, but that is a, I call it kind of a buy the dip, sell the rip indicator. So when you're in a trend, it attempts to identify the dips and rallies that you should sell and buy, or buy and sell within the, within the trend. So basically tells you when RSI is at a new high and price is not at a new high, or RSI is at a new low and price is not at a new low. So in this case, you can see that, this would be selling rips, buying dips. Buying dips does not always work, right? This is reversal, so you probably wouldn't want to take that anyway. But then we got one last week. So, I don't really take these much as signals, more so as kind of descriptions of the environment. And you could argue that the description of this environment right now is now bullish, okay? And obviously, you can see the potential head and shoulders. And also, we have the beautiful pitchfork that you should be familiar with, right? So zooming into our chart that we've been paying attention to, here we are. This is the 4-hour chart. This is that same fork, of course. Breakout through a wedge. Again, looks like we're getting some impulsive action in cable. Whether or not the dip comes before you get up here or not, either way, I do think cable is in buy the dip type of mode. And if let's say just for fun, if we went up to this 3130s and took out the high from mid-April and you did get a pullback, your 618 and your 50% would be in the region we've been looking for support anyway, which is going to be on this parallel, right? Wanted to highlight this center line too, or not center line, but the 25 line, because remember this level had been pretty reactive for really all year. I mean, you know, resistance, support, right? Spikes through it, support, all that stuff. So, you know, I think it's pretty clear. This might be one of the clearest out there in terms of where your support and resistance lie in cable. So one of the more important or clearer dollar crosses, in my opinion, looking here at 31, 30, 40s and support down near 29, 80, 29, 90. Those are the key spots to pay attention to. Couple of days, right? Okay, moving on to, let's go to dollar Swiss actually. Because just like euro, we've had this prolonged period of divergent readings, and the entire, obviously I've heard people talk about the big head and shoulders continuation pattern, perhaps, but it just as well may be a big false break as well. So, if we're looking at just a line off of these highs, so that's going to be from the May high of last year and the November high of last year. And you have your clean lower boundary line. But this is, what we'd call just a wedge pattern, right? And the wedge blew through the top of it last week. We closed at it last week on Friday. And now here we are retracing the entire week's advance. Okay, so in this case, your dollar Swiss level that's really clean and obvious is going to be the old highs at like 101.30, and we're there now, basically 101.38 as I'm speaking. So to me, get below there, false break, and certainly a bearish signal in terms of Swissy, okay? All right, commodity currencies are a little different story for me here. Hold on one second. So commodity currencies, Aussie, Kiwi, and CAD can still certainly make a case for dollar strength here. We're just sticking with firm, slope, downslope that has been in place for, over a year now. And my gut reaction to this chart or gut feeling or whatever is that we're going to try to make 3 up. So, you got a nice move off the kind of panicky lows from last week, right? From Friday. You've got a, nice little rally here. Looks like to me we could pull back, maybe get back into that. Talked about 70, 14 or so for most of the week. Get a pullback there. I'd be looking for support. Buying there, not really my thing. If we're going to be selling dollars, I do think it's a much better spot to do it is in European currencies. So again, euro, pound, and Swiss, particularly euro and pound, just because I've got the levels laid out and pretty clean. But I'd be kind of thinking that 3 waves up into this big region. So 70.87 to like 71.09, right? Got that low here, got that low over here. So lows back April 8th, April 10th. And then of course you've got the parallels that reinforce it. And you've got the underside of this line here, right? That's the line off of the March and April lows. So that maybe a little towards the upper end of this range, right, rather than 787, but you get the idea. To me, this is really a sell spot. So, while we have this evidence suggesting for DXY and which is really the European index, right? With DXY, Euro, Pound, Swissy, all that stuff, you've got this reversal potential certainly there. I'm not sure that's really the case with the commodity currencies yet. So, you could certainly look to maybe just trade, make crosses out of it, right? And look at Euro Aussie, Euro Kiwi, Pound Aussie, et cetera, et cetera. But when I look at this, it just tells me that I want to be selling probably the commodity currencies, Aussie up here, and lean on the long side on the European currencies. Kiwi, very similar, right? Still think the potential for a much bigger low in Kiwi could be down here at 65.40-ish, right? Close to 2 equal legs down there. Really clean spot, right? Low back here from August of 2018. It's also the 786 retrace of the entire rally from last year's low down here in October, okay? And of course, you have the lower channel line. So there's a boatload of stuff down here for the New Zealand dollar. In terms of the very short term, kind of the same idea as the Australian dollar, thinking that you would get some support around this 66, 30s region. We did after last night's print, we got 66.39. But yeah, right here, 66.30s, a good spot for maybe some support. Maybe get yourself an A, B, and then C up into that 67.17, which of course is the year open. And you've got a beautiful pair off the original slope back in March, okay? So Kiwi fairly clean in terms of where support and resistance, lie, in my opinion. CAD, still the least clear to me in terms of support and resistance and pattern, notably, especially pattern. But if we're looking at just today's reaction, I mean, you are getting a reaction off of this top side of this trend line. So, trend line back to December and off of the March high. At that point, it's only 2 touches, but it was resistance for a couple days back here. So, and that was April 19th and 22nd. And now today we are getting a reaction off of it. So again, has more of a bullish look here, a bearish CAD look than say does, more of a dollar bullish look here, I should say, than certainly the European currency. I'm going to go to an hourly chart here real quick. From a measurement perspective, what do we have? Don't really have anything. You'd get 1618 would be 3350s. Don't really have much there. You have last month's open there, but that's last month. So we'll see what FOMC does. I mean, you could make a case you get a 1, 2, 3. This is a 4. You go to another low. You're still going to see support on the median line at 33.35. Again, CAD's one I'm going to stay away from here for now. I just don't have much of a feeling there on the chart. Much stronger setups in other spots. In dollar yen, you piece of, it's been that kind of year. So shorted 1180, stopped out on this spike in the middle of the day last Thursday before you got the drop on BOJ. We got short on the spike the next day into perfect resistance at 1190. Move stop to break even. Monday price trades to 11.89 and we get stopped out because of the spread. Yeah, I mean, a real pain in the ass here. I still, bigger picture, that triangle, I still think is what's going on here. To just so you remember what I'm talking about, this is that triangle. So we are thinking, have been thinking that here we are, right? Big A, triangle, big B, and eventually we're going to make our way a lot lower for the big C wave. So a lot of room here, below the market. But going back to the near term, which is what we're going to be trading off of, you're looking at basically basically this low over here. So that's the low from 410, and that's going to be 1080. It's called 1080 basically. I'd be thinking maybe support there at some point. You see how this 25 line on this parallel here crosses a lot of little pivots. So here, 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 and even actually this morning or last night. So during Europe, is resistance here. So, this is a level to pay attention to as well. I mean, really, like 1080 is right here for some near-term support, but you get a bounce, and really you're right back at the weekly opening price, which is going to be 1158. So in terms of where, to get maybe return or attempt to return to a short position in dollar yen, I, kind of have my eye on this spot over here at 1158, and 1080 being the spot for a possible bounce. Okay. I still have kind of a bearish look on these yen crosses. I don't want to get too much into the crosses right now. Just focus our mind on where the setups are with the dollar crosses right now, especially heading into FOMC. All right, let's take a look at some indices. All right, so near term, this is the NASDAQ futures chart, watching for the last week or so, and we're just drawing the channel starting at the January 29th low, all right? You can see within that channel, obviously most all the price action at the top of the channel, because the markets have just remained so bid. I mean, ever since this little drop back here in late March, I mean, very little dip, right? I mean, this is the biggest dip we've had. So, you're watching this for not so much for entry points unless it's really short term, but for me, I'm watching it more for behavior changes or possible behavior changes. So we do have something that could be a possible behavior change right now, because what's happened is we dropped yesterday, right, early in the day, early in US session, we dropped into this parallel here, which you can see that parallel does cross a lot of high and a lot of lows. Support all month last month in April, right? Well, we found support again there yesterday on the last day of April. But what we have had since then is the upper parallel here, which was resistance, okay, for April. And again, you're not getting much off of this. It is, the market's bid like crazy, but we're still there. So, Google earnings, Apple earnings, and since then we've just been sitting up on this level here. So, former resistance, providing resistance, okay, at least that's something. But there's really no behavior change, or I should say anything to be bearish about from from the way I look at the market, unless you get something like this. So you need to see old support provide resistance rather than just resistance provide resistance. So you'd want to see a break, right? A break here would be something different because we haven't had that. And then you'd want to see resistance on the old support, okay? At that point, then you could say that, you know what? The market's changing a little bit. That'd be an early indication that the market is actually changing. So we don't have that yet, but you know what to watch for. On the other hand, if we do go higher still, then really you're watching the line, the parallel here, which is, basically just the lines off the March 21st high and the line off of the April 25th high last Friday, which is still the high. And that's going to be, of course, if we get up there, say during Fed or something, it's going to be, say, 79.46, 47 at this point. But those are the things to watch for in the NASDAQ futures. In terms of the S&P, you also have a channel from this January 28th low. If you just draw lines off the highs from early March, you can see that we continue to fail on it. We also continue to hit right on the center line. So in this case, it's pretty cut and dry, and your behavior changes. You've obviously got this diagonal line here, but really it's about the median line. So the median line is super clear in terms of where support and resistance, or in terms of where the behavior change level is. That level is going to be right here about 29.30. If you crack that, right, your next level down, which is probably support, is probably 2,900. And again, just like I drew in the little possibility for NASDAQ, in order to get an actual behavior change here, you would need to break that, come back, and then you want to see it provide resistance, okay? Until that happens, fighting this uptrend is really, 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 really impossible. And again, just like we had the other scenario for the NASDAQ, if we do blow out to highs and go higher yet still, guess where this upper channel line is? It's basically 3,000, right? So it's that magic number, right? It's when CNBC gets the hats out. So that's a level to at least be aware of. It's not a prediction that we're going there, but you want to be prepared for either event. So you know what to look for in order for the market to change its behavior, and you also know what to look for or where to look for something if we do blow out to highs yet again. All right. Another market that I think is important to keep an eye on is going to be TLT. So this is essentially your long bond, and here we go. Let's see. We'll go to this is a weekly chart. We'll go to the weekly chart. All right, so the weekly chart here, TLT, you can see where we came down and found support in February, right? Big blowout, big pullback. Go to a daily, zoom in. You can see the importance of this is going back and looking at the last few years in 2007 and 2018. Moves come from. The big moves come from these, the center line. So yeah, sure, you trade around it, but then we come back and find support and zoom higher, right? We broke below resistance, 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 right? Resistance. We had the gap up through it here in March. This is the last time the market sold off. That was March 22nd when you had a big gap through that. through that level, and that was when you had really the last dip, if you want to call it that, in the general market, in the indices. If you get back through this, we're at it right now. We're at a key level. This is key resistance. If you get back above this level, right, to me, that's bullish for the bonds, and maybe tells you something is happening in terms of risk appetite. But just simply pay attention to the bonds. The relationships have been very difficult in terms of intermarket relationships, really over the last couple of years, but especially this year. So, you know, if you get back through this, then you want to see us find support on this at some point. That would be a bullish bond story, potentially a dollar bearish story just because of the yield situation. But again, you have to look then at the yield spreads, not just the absolute yields in the US. And if you want to draw this yourself, so you know what I'm looking at exactly, this is a log scale chart, and we are going off of the 2007 and 2011 lows and just extending the parallel up through the 2008 high, and you can see how beautiful that actually is in terms of calling massive turns in the bond market, okay? Some other charts that are obviously noteworthy here. Crude oil, this is from Sunday. You can see that we did come up and find resistance yesterday, right up here, right? That's a really big spot, those 64.40s. Old support from last year, from June through August. It was kind of resistance a bit back throughout April. Structurally, I still have to respect the potential for one more run to highs in crude oil, given that the rally from here back on the February 11 low is a clear 1, 2, and 3. Even this 3 is 3 or is in 5 waves. So to me, I'd still be looking for support a bit lower. You know, the trend line here comes in pretty close to the low over here on April 5th. That's going to be about $62 at this point. It's 61.80 here, so 61.80 to 62. That's a level to look at. It's a pretty big drop from here. I mean, you're currently trading 63.12, so you're talking, $1.12, $1.30, which is going to be about 1.7%, and that's where I'd be looking for potential support in crude oil. You start to break below there, then sure, maybe we'll have to reassess, but I'm just saying this, to me, has that look of needing one more push to the upside. In metals, interesting today, gold's actually holding up okay. Silver and copper are getting hammered. So the copper chart, I mean, this is a pretty ugly breakdown here. You've got the resistance or former support from 2017 and 18. We traded around that from February through April. We've resolved this to the downside, okay? Now, you do have a level over here. Basically, the 200-day average, okay, is right here. So that's going to be 618 as well? No, 618 way down there. So that might be more where we're going to look. And I think this is something to keep in mind too with the commodity currencies, right? We're seeing the weakness in the commodity currencies like we're seeing it in copper today. So some levels to pay attention to in copper, but basically I do think that this, 285.80 to 286.70, right? These old highs over here, okay, these are highs from last year, last summer, last September, and last December. Those are going to be levels to pay attention to on the upside for resistance, because we've now resolved this to the downside. At the same time, 50% retrace and 200-day average are going to be in line for possible support at 276.95. And those are the things I would pay attention to in the near term. Ultimately, your bigger support is probably somewhere back here, okay, 270, 160. So as mentioned, silver is getting whacked today. We're still within this channel. I know that there were some in here that do have some shorts with silver from back in the day. But yeah, silver is doing what I kind of thought the metals would do a little more in terms of selling off. You know, the 1444 area, 2 legs down, still to me is an important spot. Not really thinking anything positive on silver unless you get over this 1505 50 area, which is going to be the high from April 17th. And if you get above there, then you're back above the 200-day average, of course, and you're back above this, or you're above this channel line. Gold a bit different, and that is holding up far better, but still there's no change really in the analysis here. You know, you could still trade up to 1297 and still be in a downtrend. You know, 1297 is going to be this channel. Okay, that's really all that matters for me in terms of the gold picture. This is your resistance line. Your 618 of this drop is going to be 1297. I would not be surprised if we traded up there or traded higher from here for the simple reason that you've got silver back on the lows again and gold not. Again, that non-confirmation is something that we've seen happen at, you know, turns throughout history, but it's happened a lot this year, right? So we've seen it happen a good deal this year. But 1297 to me, if you got there in gold, would be a level where I'd be thinking more, you know, look lower than, you know, chase it higher. You know, if you start to break above there and, you know, we can start establishing some sort of support or some sort of pattern to get bullish, fine. But until then, you know, I would err on the side of selling big rallies in gold. Here is a random market that I probably don't look at a whole lot. I've had people ask, but this is natural gas, which has been just brutalized all year. We just traded last week to the lowest level since June of 2016, took out these lows over here from February 2017 and February 2018, and we put in a little weekly key reversal, and now we're back above. So natural gas is a market to pay attention to potentially for some upside. We've also got a kind of a 5-wave rally or a 5-wave drop, so you'd be looking for a rally anyway. But interesting potential for natural gas, and really this is going back to 2009, believe it or not. So I don't know, could be a gigantic base for natural gas, but we're really on a stretch going on a limb there. That's just a possibility. All I'm saying is near term, kind of like natural gas here, right? There's a little hourly chart. Let's go to a 4-hour chart. It's kind of your first sign, right? Breaking the shortest term trend line. And that is everything that I've got to look at today. I do suppose we could take a look at maybe some of the big stocks, because Apple, of course, is so important to the market. Remember this chart from last year. I know I talked about this last year, but we're looking at slopes off the 1998 and 2003 lows, okay? And when we got up into this level, we talked about a blowout, which we got, and then back below. And then when you drop below this, that was the signal that everything was kind of, and it was, but we was looking for support closer to here, of course, it never happened. Now we're going all the way back to this level again. So if you got all the way back here, you'd be talking about essentially a retest of the highs in Apple stock. there is a shorter term level to pay attention to in Apple. So this is the from the 2013 low, okay? And we've got the 75 line, which was resistance for a time throughout 2017 and 2018. And that is right up here at about 220, which, by the way, is to a gap. So that right there is a gap, or uncovered close, I should call it, at 222.22. And finally, we could draw a trend line over here as well. Right? So that trend line, very well defined in terms of all the touch points. You're actually just about there. So, we're getting into an area for Apple where 217 to 222, I know it's a $5 range, it's a big range, but guess what? Apple, is up $15 today alone. So we're in that zone where you pay attention to Apple. This is obviously important given the fact that it is one of the world's largest stocks. It was the largest for a time. There's been kind of the last year or so, the largest company in the world has gone flip-flop between Apple, Amazon, and Microsoft. And Microsoft, by the way, has just blown the top out of its entire channel from the 2009 low. All right, and we are actually nearing the retrace or the Fibonacci extension of the entire tech bubble to financial crisis low at the 2618. Measurement for that is 132.94. High for the move so far is 131.37. So we're very close to that. So, looking at Apple, Microsoft, the world's two largest companies right now, and yeah, nothing to say they can't keep going forever and ever and ever, but at some point risk will happen or come back into the system, and we are getting awfully close to major levels where I guess it'd be pretty important to pay attention. In some of these individual, obviously they kind of hold the key to the stock market, in my opinion, considering that they are the world's largest companies. All right, so went a little off the beaten path there, but some important things that I think we should look at or be aware of. All right, so are there any questions? I'll take a couple questions if anyone's got any, but the levels are pretty clean and laid out as we head into FOMC, right? Anything. And going once, going twice. And all right, we're finished. Okay, so as always, thank you so much for attending. We ran through a lot today. There was a lot to get through. Going into FOMC, my main focus is going to be on euro, pound, and probably dollar yen, but especially euro and pound, okay? I think the levels there are extremely clean and worth trading. Haven't been able to say that in quite a while. So May is here, second trimester of the year is here, and expecting to have some really good opportunities, which unfortunately we couldn't say over the last couple of months, or at least they eluded me. So, all right, have a great rest of your week, everybody. And again, FOMC today, so get ready, and I'll talk to you guys later. All right, thanks again. Take care.